Hello, ladies and gentlemen, traders, whatever you want to call yourself. Hope you're having a good day. Today, we're going to be doing a video on broker pricing and entry because the two kind of go hand in hand. You basically want to know where your broker price is coming from before you take entry. You never want to take your entry based off of your data feed being like your MT4, MT5 pricing, your freestockcharts.com, Trader's Way, whatever you happen to use. The number one thing you want to do is you never want to trade off these crappy little broker charts, that's for sure. Okay, so let's take a look. Right now, I got up. I'm looking at AUD NZD. We're going to cover broker pricing first. I'll try and give you an explanation on where your broker price comes from, how it's determined, why it varies from what you're seeing on your screen when you're going to place a trade. So if you look, AUD NZD right now is what, 7.7. It's bouncing all over the place. FOMC just released. That's why these charts look hideous. But if we look, we're averaging, let's see if it slows down here for a second, 760.64. So it's kind of matching up right now, but if we watch 3857, 40, 56, you see how AUD NZD, which is the one I have in blue here, excuse me, price isn't lining up exactly. It varies from what your MT4 broker is giving you. So how do your brokers get the price that they're shoving down your throat when you want to take a trade? Well, Markets World, for instance, which is the one we're looking at here, they proclaim to be using 26 separate data feeds, which they combine all into one. So I guess they take price, add it all up, divide it by 26, and that's the price you're seeing, is what they're giving you. So if you look, like it was at 9.3 while we were at 5 something here real quick. It does vary a lot. Other brokers, they use RSS feeds. Some of them supposedly purchase their own exchange feeds. And basically what I see, and I'll show you, a lot of them is just, it looks like they're taking bid plus ask, dividing it in half. What is bid plus ask? If you go into your MT4, if you're using MT4, go to Properties. And on the, not the Colors tab, but the Common tab, go to Ask Line. Now, if you look, we have two lines on this thing right now. We have a green line, which is the actual price, and the red line, which is the ask line. That's what the price, if you were trading Forex, and let's say I took it's just basically the spread. It kind of, the way the brokers do it, not all of them, and I'm sure they have some magical formulas they do it, but if you see these two lines, how they don't match up, right now price is moving a lot, but you see how they don't stay consistently the same distance apart? It's called a spread. Take a look at what the spread is on this right now. It's moving pretty quick, so you might... Okay, so I'm going to put the spread up on the screen real quick. This is the spread up here at the top right. And if we look, that thing is all over the price. So we got 24, it was down to 17, and it jumped up into the low 30s for a second there. Although price may not be moving, if you watch here for a bit, if price will settle down, price will stay still. But you notice that red line, right there, I mean, you might have to pause, but the red line actually touched the green line there for a second. So now that we see two different prices on the screen, let's take a look at a broker feed again. So it's staying pretty steady at 783, although price is moving around everywhere, and we're at 7.4 here. So we got about a difference of 10 to 15. AUD NZD, the reason I'm showing you this one is because it's pretty far apart normally. The spread on it's larger than on traditional pairs like GBP USD, Euro USD, along those lines. Like, let's take a look real quick. If I go over to, here's cable, ugly again, but let me go to that news template, and let me add in the price. Let's see, it's MAG. Let's take a look what the spread over here is. Yep, forgot it in the wrong place. Sorry about that. Okay, so, well, I am a mess today, I apologize. Magnify market price. So I want it upper right, which is 1, not -1. Sorry about that. Okay, so price is up here. Now let's put the spread on there. Make it nice and big for you. Okay, so this spread, as you can see, is, and let me get rid of Expert Advisor so you can see it clearly. Okay, so if you notice now, the spread here is what? Only 5, 6, 7, 10. But if we look again over at AUD, NZD, 27, 23. So what's that tell you? If you're trading with binary options and you're not used to using their price, what were we looking at? Euro, I think? No, it is cable. Cable might be something a little bit easier for you to trade with because the spread's smaller. So if the spread's smaller, by taking a look at this, price should be closer. So cable is 318, 312. Let's take a look. I'll leave it up on the second. It has less of a spread, so price on your broker, your data feed, is closer to what Markets World or, in my experience, Stock Pair or any of the other brokers give you, because we have a lower spread. The spread's not jumping around as much. So let's take a look at what the spread looks like on this one. Let's do show ask line, and I gotta do some colors here. Oops, almost bought something. And let me change. Crap. Let me get rid of that real quick because this is a live account and I don't want to blow any money. Ugh. I have no idea what I'm thinking today. Sorry, I didn't want to open up any live trades. Okay, so but if we look now, the aqua line is price and the red line is the ask. They're a lot closer. So what that correlates to in your day-to-day trading is cable's price is going to be closer to your MT4, MT5 broker's price, free stock charts, whatever you're using. Price is going to be closer. So you're not going to have to worry so much about, well, Jesus, why am I getting one price here and another price there? Because it's going to be more spot on. So as a new trader, I definitely look at the spreads. I'm just a Google MT4 spread indicator, and you should be able to, actually, I'll just throw the indicator in the description so you can have the indicator. I'll put a link to it so you can have it for yourself. If you're new to trading, you want to look for something with a lower spread because your MT4 price and your broker price are going to match a little bit better. Okay, that being said, now you should know which pairs you want to trade off of. The next thing we're going to look at is entry. How do I do entry? What are some of the things that I look for when I'm doing entry? Well, I'm a reversal trader, so what I look for in entry, and we got some spikes here, but we'll see what we can do. If you're not used to pin bars, I'm going to switch over to candlesticks since a lot of people prefer these. Okay, so looking at the chart, the first thing I look for when I do entry is, as a reversal trader, I try and wait till the end of the candle, or I'm on a 5-minute chart. I try and wait till the last few minutes into it. Reason being is if price, and again, FOMC just came out. If you don't know what that is, it's one of the 2 largest news reports that happen each month. So the markets do look kind of crazy right now. But I'll try and get the idea across for you. When you're trading, if you take a trade, 5-minute candle opens up, and let me throw some indicators on here just as a general idea so we can go back and look at it. I'm just going to throw on some pivot levels. Okay, so here's some pivot levels. We have weekly, daily, and let's bump to a different time frame. Okay, this will make it look a little bit less of a mess. So let's say here is your candle that you're going to trade on. I'm going to highlight what I'm talking about in blue. This is what we were looking at. Here was price. It broke daily R1, a weekly pivot, and continued to go up. So I'm going to say this is a 5-minute candle. If you don't understand how candles form, what we can see from this candle is that price started off here, and then it went up, 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 up to here, and then it dropped back down to here. Now, if my entry point would have been this weekly pivot, and as soon as price broke it, I would have entered in a trade for reversal, saying price is going to close below the weekly pivot, I would have lost. Reason I would have been lost because let's say from this period to this period, there was still 4 minutes left in the candle or 3 minutes left in the candle. Now, all I would have had to do to win this trade, pretty simply, is just wait the damn thing out to the last minute or so. Now, a lot of times price is going to go up, then at 4 minutes or 3 minutes, it's going to spike back down. It's just going to sit there for the rest of the time. So it's unavoidable. One of the biggest things when trading binary options is once you become consistent and you've picked a system you are comfortable with for your trading style, the next thing you need to focus on is entry with that system. Entry will make or break you as a binary options trader. If you have bad entry, you're going to lose trades. So like on this one here, for instance, I knew we were going to have a reversal, but I would have taken a crap entry. At this point, it would have been a loss. Even though I did get the trade right, because of my entry, I lost the trade. So what I mean by waiting to the last possible, and this is a two-edged sword, because sometimes if you wait to the last minute for a trade to come through, see if I can find one real quick. Like for instance, and I'm gonna draw another blue square for these two candles. This doji candle and this. So let's say I would have thought price was coming up here, and I thought it was going to reverse, even though it didn't. But just so you can try and kind of understand, price was up here, and for the sake of it, let's say at 3 minutes, it dropped back down to here. Or let's say at 1 minute, it dropped back down to here. Or 2 minutes, whatever it wants to be. You'll miss a trade here because let's say you're waiting to the last minute of the candle, and at 3 minutes, price was up here, drop back down because you were looking for the break of the R2. So price opened up, came up here, and you're like, there's 3 minutes left. I'm going to stay out of that trade. And then price dropped back down here. Part of learning to become a good trader is you're going to have that mental attitude that you're not going to catch every single trade. But like my set of rules on reversals, I shoot for 1/8. When I first started, I wanted 1/3. But you can shoot, I will not enter on a reversal trade unless I catch a certain portion of the candle. So if you break the candle down into fourths, you'd be shooting for the top fourth of the candle. As you get better, the top third of the top third, top fourth, top eighth. Basically, you're making that slice of pie smaller each time as you work on entry. You should get better at it. It's gonna, by sticking to those rules, and I'll show you what I do on trades. I use the 1 minute charts. I go from my 5 minute to 1 minute for entry. By sticking to those rules and saying, I'm waiting for the last minute of the candle, for instance, or the last 2 minutes of the candle. It's up to you to decide what your rules are and how many trades you want to lose because your rules are stricter, or if you want your rules to be a little bit looser. I mean, this is all personal money management for you. But what I'm saying is, you want to have a set of rules before you even go in with entry. You need to, unless it's a price action thing and you're that good at it. Until you have price action down, narrow your chances of losing by having a set of rules. So let's say, for instance, this chart right here, it's breaking the daily R3. I have 10 minutes left. Let's take a look at it on the 5 minute. Okay, so this is on the 5 minute. 6 seconds, 5 seconds left. I would have bumped to the 1 minute. On the 1 minute here, I see no signs that it was weakening at all.